Hey everybody, it's Jason Luse from Luse and Womble. I hope everybody is having a good reopen to the practice or soon to be reopen. I've had some good feedback from clients, so hope everything's going well on that front. Business as usual here at Luse and Womble. We are knee deep in PP loan amendments and trying to figure out forgiveness stuff um, but one of the things that we wanted to touch on that's kind of gotten pushed to the side through this PPP loan um, transition and implementation was the economic injury disaster loan through the SBA. We've had a good amount of clients get this funding, and we wanted to take some time to make sure you understood these loans. They're very different than the PPP loans. And so we thought it would be good to put together a little informational video to kind of walk you through these loans and some of the important provisions. What we're going to work through today is some important notes. These loans are very um, they need to be taken much more seriously uh, than you might think. And that's why we wanted to set aside this specific time. These loans can be pretty restrictive, and we want to make sure everybody follows the rules that are laid out in the loan documents. We'll talk about how to use the proceeds and what your next steps are going to be to get this ball rolling. One of the recommendations that I would make in working through this, and just to kind of give you some background on how we ended up in this spot, we needed to work through the PP loan implementation first, and then start to focus on this. Um, Not many people have experience with these disaster loans. They're typically implemented during a natural disaster, Hurricane Harvey, Hurricane Katrina, and so this is sort of new territory for us. It's new territory for a lot of our clients. In general, throughout the country, not many people have ever gotten an economic injury disaster loan. So it took us some time to work through the research of these loans. We MLW actually engaged an attorney that has experience that used to work at the SBA and currently works on SBA loans. We had to engage that attorney to answer some of the questions that we had about the loan. And so we took this very seriously and actually engaged our own advisors to help us with some of the provisions of the loan. So I'm going to walk through some of the important notes of this loan. The first thing is I think every borrower needs to read through the loan documents to get a better understanding of the loan. Do not solely rely on us. I think it is very important due to the complexity of the loans to read through those and see how these provisions work. I'm going to answer some of those questions today, but I think it's important to get a read for yourself because I think it'll give you a better background of being compliant with the loan. This loan was intended to help small businesses that suffered a substantial economic injury as a result of a declared disaster area. And COVID, essentially the entire country fell under this sort of declared disaster zone. The basic terms of the loan, it's 12 months of no payment. So essentially you get the loan, you don't have to make a payment for 12 months. It's a 30-year loan at 3.75% interest, and there's no prepayment penalty. So by and large, this is a pretty good loan as far as the payment amounts are pretty low. The interest rate isn't bad. And so that's one of the things that could allure you to this loan is the terms itself compared to other loans. It's a pretty good loan, and it's a good way to minimize cash outflow during an economic disaster. Most people that received this loan, they also received an advance on the loan in the amount of $1,000 per employee, not to exceed $10,000. So this was that EIDL grant that people became familiar with early on during this crisis. And so that advance you got was an advance on this particular loan. That particular piece of the loan is a grant and will not be due back. It does have some interplay with the PPP loan, but just for reference purpose, that advance was related to this economic injury disaster loan. Remember that when you got this loan, the amount of the loan that wasn't related to the EIDL grant or the advance is not free money. It is a loan, just like you would get at a bank, and there are strings attached to this loan. So that's what we got to be careful of. For loans greater than $25,000, the SBA will take collateral in your practice assets and put a lien on your practice. This is very important to know. They will put a lien on your practice and hold that as collateral until it gets paid off. During that time, the borrower cannot sell assets except normal inventory turnover. Sell assets of the practice that are secured by that lien without SBA written consent. So your assets, anything you hold that has a useful life longer than a year, your dental chairs, your x-ray equipment, any of that stuff cannot be sold without SBA written consent. A couple of examples of that would be selling your used piano to another doctor, selling your assets to a new partner to join the practice, selling 100% of your practice. And so we got to be very careful during the terms of this loan, as long as we have a balance due, that we're not selling assets that the SBA has collateral in. We have to get written consent from the SBA. This is an important one, and this is the one that to me just kind of throws up some obstacles. The borrower cannot increase outstanding loans with lenders who hold a superior lien position without SBA written consent. Let me rephrase that. Any bank that's loaned you money that has a lien on your practice that is ahead of the SBA. So let's say, for example, a few years ago you borrowed $800,000 from Bank XYZ to buy your practice. Let's say you've paid it down to $650,000. All right, that Bank XYZ currently has a first lien position on your practice, and SBA would have a second lien position. So in terms of protection level, or in terms of who has first rights to assets in this practice, Bank XYZ has a superior lien position to the SBA. They have first rights to your assets if you default on loans. So you currently owe them $650,000. Let's say, for example, that you wanted to expand your practice and you needed to borrow more money to do it. You cannot seek funds from Bank XYZ to increase the amount of that loan, the amount that you owe Bank XYZ without SBA written consent. Okay. This is where things start to become a little bit tricky with these loans, and the fact that our recommendation would be that you shouldn't borrow any money going forward without the SBA's written consent. The borrower must use the proceeds of the EIDL loan solely as working capital to alleviate economic injury. This money is not intended to be fund money. It is not intended to pay down other debts, refinance other debts. I'll go into eligible uses for the loan in just a second, but it's strictly meant to be operational working capital of the practice. As the borrower, you must keep 3 years of itemized receipts to prove how you utilize the loan. You cannot relocate your business or businesses or locations without SBA written consent. The borrower, this is one of the provisions in the loan document, to the extent feasible, will purchase only American-made products with this loan. Again, they leave some flexibility there to say to the extent feasible, and so we've got to be cognizant of that when we use this loan proceeds. You must notify the SBA if you received PPP loan money or any other grant money related to COVID. So I have some clients that got a grant from their county. We need to notify them in writing. We need to notify the SBA in writing that you got that money along with PPP money. The borrower must send the SBA proof of property and casualty insurance. You must provide financial statements to the SBA within 3 months following the expiration of the borrower's fiscal year end. All of our clients that I know of, at least, have a fiscal year end of December 31st. And so if you got this money, you need to provide the financial statements we upload to the portal for that given year to the SBA within 3 months following that year's end. Upon written request of the SBA, the borrower might be required to provide financial statements with an accountant's review report prepared by an independent public accounting firm. This is an important note. MLW does not provide audit and attest services, and a review report is considered an audit and attest service. So if you get into a situation where the SBA has required an accountant's review report, we do not provide those services. We are not licensed to provide them. We are not authorized to provide those services. So you will be required to hire an accounting firm that performs those types of services at your own cost. This is an important provision just to kind of highlight the tone of these loans. I just thought this one kind of stuck out to me. The borrower will not, without the prior written consent of the SBA, make any distribution of the borrower's assets, or give preferential treatment, make any advance directly or indirectly by way of loan, gift, bonus, or otherwise to any owner or partner or any of its employees, or to any company directly or indirectly controlling or affiliated with or controlled by the borrower or any other company. In layman's terms, we have to be incredibly careful with this loan, that we're not utilizing the proceeds of this loan to preferentially benefit anybody related in the business, okay? Whether it's an employee, a partner, an owner, we've got to be very careful in that those funds are used only for operational expenses and not to be given to the owner in a preferential way. An example of that was, let's say you ran up a bunch of personal credit card debt during COVID and you want to take that money out to pay off credit cards. You can't do that because that would be using the money to give preferential treatment to an owner for non-working or operating expenses of the loan. How do we use this money? In working with the attorney, we had a specific question for them that I thought was pretty eye-opening, and we said, will the SBA be that picky about how the funds are used? The attorney's response was, I can answer that with a resounding yes. So in regards to that, I want to highlight the importance that we understand what is an eligible use of the money and what is ineligible. I've got a list here that I'm going to work through. To kind of go through the ineligible, what is not eligible, what can you not use these funds for. The first 5 I'm going to highlight: the payroll, retirement contributions, group health insurance premiums, rent and utilities. See the asterisks there. The reason these are ineligible initially is because most of you are going to be using your PPP loan to cover these costs, and we can't use those loans for the same purpose. And so it's not to say that those are ineligible all the time. They're just not eligible. They won't be eligible until you've exhausted your PPP loan funds. So until you're done utilizing your PPP loan funds and have worked through that period of time, we would advise you not to use this money to cover payroll, retirement contributions, group health insurance premiums, rent, and utilities. Once you've exhausted your PPP money, you can start to use that the EIDL money to cover those costs. You cannot use the money for shareholder distributions. This kind of goes back to that provision I just talked about. You can't take money out of this. You can't take funds out of this money home to pay bills at home. I wouldn't use it for life and disability insurance. Some of these things are statutorily ineligible in the loan. They are specifically excluded inside the loan agreement. Some of it is just our recommendations, as they typically aren't considered normal operating expenses. And so the life and disability insurance of the owner clearly wouldn't be covered by this loan. You cannot purchase fixed assets with this loan. What is a fixed asset? Anything you buy that has a useful life longer than a year and costs over $2,500 per unit. And so a lot of times when we send you suspense reports, we'll ask you about these things, but we can't use this money to buy anything that has a useful life longer than a year. We want to think of this money as being normal, disposable type expenses. And so we don't want to buy assets. We don't want to go buy a panel with this money. We don't want to go buy a sensor. We don't want to go buy a cone beam, whatever the case is. We don't want to buy assets with this money. We cannot use this money to pay off debts, including credit card balances. So we want to use this as cash only, cash expenses only, operating expenses only, not paying off past credit card balances. We do not recommend giving charitable contributions out of this money, excessive continuing education, meals and entertainment, auto expenses, relocation expenses, gifts, and legal fees. This is a pretty good list here of what you can't use the money for. There's a lot of things you can use the money for, and we're going to provide a cheat sheet for our clients that have this money, so you can kind of put it by your computer and know exactly what you can use the money for, because there is quite a few expenses you can use the money for. But these are sort of limited to the ones that you don't want to use these funds to cover these costs. So due to the tight restrictions on how these funds can be used, MLW highly recommends putting the money in a separate account and using that money in that account for eligible expenses only. We're going to provide a cheat sheet of those expenses. We recommend you pay those eligible expenses directly from this separate account. Don't commingle it or reimburse. We want you to set up that account, get checks and debit card for that account, and use the money in that account to pay for these costs directly. The reason we want to do that, we don't want to commingle these expenses, these eligible expenses, on a credit card with ineligible expenses. We've got to create a system here where this is easy to prove in the event you get audited. And so we want to keep it to a separate account. We only want to use that account for these eligible costs. We want to keep those receipts. We've got to create a ledger to be able to prove that this money was used for the right thing. And if you start to commingle this money with operational money or operational credit cards, you could have a problem. So I'm gonna ask you to take a quick break from worrying about getting points or rewards on credit cards, and make sure that this account directly shows the money outflowing to eligible expenses and it's not commingled in any way. I just want to highly encourage you in this busy time to be very disciplined about these rules that we're setting out. As I said before, until the PPP loans are exhausted, do not use this account for payroll, retirement contributions, group health insurance, rent, or utilities. Once those funds are exhausted, you can begin to use this account for those costs. Now, this is the one time where I'm going to tell you that a reimbursement of your operating account would be okay. If we're gonna use this money to cover payroll, which is a good way to deplete the money as fast as possible, once your PPP loan funds are exhausted, you will run payroll out of your normal payroll account, and you will reimburse that account with your EIDL specific account. So once you're done with using all your PPP money, now you're going to start reimbursing the operating account with this EIDL money. You'll be able to run, and we'll send some instructions on this, you'll be able to run a report in the payroll system to show the total cost of each payroll period, and then you can do a direct transfer from your EIDL account to your operating account, write payroll reimbursement on it, just transfer that money over in an exact amount to reimburse your operating account for payroll. That's going to be the cleanest way to do this. And you can work with us as you get closer to your first payroll where you're going to use EIDL money. We can teach you how to make that transfer to reimburse yourself. What are your next steps? The first thing you want to do is notify your planning team that you got this money and let us know the exact amount. We need to know so that we can take some steps to help you get this set up properly. Like I said earlier, the SBA requires that you notify them of PPP loans and insurance. So we're going to ask you to mail a certified package to the SBA that includes proof of your property and casualty insurance. What is that? That's the insurance that covers the equipment and collateral in your practice from a fire or anything like that. So that's going to be your general business insurance. It's called property and casualty insurance. If you don't have a current copy of your insurance policy, you need to reach out to that agent or agency to get a copy of that. You need to include in that package a letter notifying them of the receipt of your PPP funds. For each client that notifies us that they got this money, we will provide that letter for you. We already have it written out, ready to go. You also need to provide a resolution of the board of directors. We also have a form for that. So we will provide not only the PPP fund notification, but also the resolution board of directors. We'll put that on your portal. You're going to print that out, sign it, include it with a proof of your PNC insurance, and mail that off to the SBA. We will give you the address at that time. We want you to set up a separate bank account to hold this money exactly. Do not commingle this money with any other money. Transfer the exact amount of the EIDL loan to this account. You may have already done that. You may already have that separate account, transferred all that money over. We just want to get it over. We want to be able to provide proof of the use of this money. Start using this money for eligible expenses. So let us know. We'll get that package mailed out, set up your account, and start using the money. After the PPP loan period, once you've exhausted all that, you can start using this account for payroll, rent, and utilities. And then as we start to utilize that money, we do want you to start working with your advisors to develop a plan to pay this off as your business recovers. When in doubt, get the SBA's written consent. So one of the things that I wanted to, before I finish up here, kind of go with is while this loan does have good terms, it has a lot of strings attached. And so we want to be proactive in coming up with a plan to pay this off when you can. Now, theoretically, if you're using this account to cover these costs, your main operating account should build up because you're not using that much. You're not using your normal operating account to pay all these expenses that are eligible. And so you could be in a position where if your practice got back to a good reopening, you've got some excess cash, you feel the urge to pay it off. Work with your advisor to come up with a plan to get that paid off. One of the things that I am gonna work with my clients on is even if we get to a situation where we can pay it off relatively early, we might hang tight just a little bit to get through the fall, maybe the first quarter of next year, to make sure we don't have any more COVID disruptions in our practice before we just write a check to pay that back. And so that's going to be specific to your individual plan, but I don't think, for the long term, even though these loan payments will be pretty low and the interest rate's pretty low, I'm not sure that the best play is to drag that loan out indefinitely. The SBA, the sooner we can get the federal government off our ledger as a lien holder and have collateral in our practice, the better off we are. And so we do want to come up with a game plan for that. Anyway, that's all I have on the economic injury disaster loan. Just take a quick minute to pop your team an email and let them know if you got this money so we can get the ball rolling on getting this implemented and helping you get a system in place to track this. Thanks so much for your time. Look forward to hearing from him.
Understanding all the options available in the CARES Act and making sense of the best choices for you can be a huge headache. For one thing, you have to spend countless hours reading through articles and searching for explanations, or nag your colleagues and hope they got the right answers. You also have to calculate the break-even on employee layoffs compared to SBA loan forgiveness compared with long-term economic stability for your practice. Plus, there's the challenge of guessing at whether the interpretations of these new laws might change in a week and completely derail your strategy. As a result, managing your financial well-being and the cash flow in your practice during this uncertain period is a more time-consuming and all-encompassing hassle than you ever bargained for. Fortunately, there's a better way. Introducing Luse and Womble, a one-stop financial planning and accounting firm that specializes in the unique needs of dental professionals, so you can relax knowing you've left the complexity of analyzing all your options to the experts. With Moss, Luse, and Womble, we allocate appropriate resources to provide accurate and vetted information to all our clients and their colleagues that can be trusted. Then, we speak with our clients to help them understand their individual situations and customize a plan. And when these more immediate concerns wane, we'll spend a full day learning about you and your goals. In addition to being the foundation of your step-by-step financial plan, this in-depth consultation will also serve as an integral part of the process every year going forward. And of course, you can also trust in our commitment to personalized service, like speaking directly with a member of our team via email or phone whenever you have questions or need advice. One of the smartest ways to ensure the health of your practice is to put sensible routines into place. Our accounting, tax, and payroll services are designed to help you keep your finances in the best shape for the long term. But perhaps the best thing of all is that our services are designed with efficiency in mind. We integrate those tax and accounting compliance services with our tailored personal and business financial planning advice. This often saves you time and money. To learn how MLW can provide vital solutions and expertise you need to achieve a sense of balance, direction, and peace of mind during these turbulent times, review our website at mlwfinancial.com or call our office to schedule an introductory meeting at 972-674-2584.